In the world of investing, there's a certain magic to earning a steady stream of income month after month. It's the freedom that can only be found in monthly dividend ETFs, where the dividends keep flowing like a river that never runs dry. For John and those seeking this kind of financial sorcery, this video shows the ultimate portfolio of monthly dividend ETFs, meticulously stacked from the best to the very best with the highest yield, to help you earn consistent income throughout 2023 and beyond. In this exclusive video, we introduce John, a savvy investor who's about to embark on an extraordinary financial journey with $10,000 in hand. Spoiler alert, he goes big on his final investment. So lean back, relax, and witness how John masters the art of building wealth with these remarkable investments. Now, before we dive into our top picks for this year, let's quickly cover what exactly monthly dividend ETFs are and why they're a fantastic option for the average income earner. Imagine receiving a paycheck every month, but instead of it coming from your boss, it comes from your investments. That's what monthly dividend ETFs offer. They are investment funds that pool money from multiple investors to buy a diversified portfolio of dividend-paying stocks. The dividends generated by these stocks are then distributed to ETF shareholders on a monthly basis. Now, let's talk about returns. The primary goal of these ETFs is to provide investors with a regular income stream. But don't worry, you're not sacrificing growth potential here. These ETFs offer attractive dividend yields and have a history of increasing their dividend payouts over time. Picture this, a tree that grows taller and more fruitful with each passing year. That's how these dividend ETFs work. They invest in companies that consistently increase dividend payments, giving you a slice of the pie every month. The longer you hold these ETFs, the larger your monthly payouts become. It's like watching your money grow while enjoying the fruits of your investments. But what should John be looking for to invest in the top picks this year? We got him covered. Here are our top 7 monthly dividend ETFs. Number 7. WisdomTree US High Dividend Fund. On average, for this ETF, the dividend has been growing by 6.25% each year for the past 5 years, with an investment cost of 0.55%. Based on this, if John invests $10,000 today, at year's end, he'll earn $625, and all that will cost him only $55. And if the investment had been made 10 years ago, based on the ETF's consistent dividend growth over the past 10 years, John's $10,000 investment would have a value of approximately $17,894 today. It shows that the fund can be trusted to provide reliable and slowly increasing returns. One of the standout features of this is its dividend weighting strategy. Instead of traditional market cap weighting, the fund's focus on dividends provides a different perspective on the market. This approach ensures that companies with higher dividend yields carry more weight in the fund, potentially enhancing income potential for investors like John. However, there are even more captivating chapters in the world of dividend-focused ETFs. Brace yourself for number 6. Invesco S&P 500 Low Volatility High Dividend ETF. In short, known as SPHD, this fund aligns perfectly with dividend investment goals. John is excited about SPHD because it offers high dividends and low fees. The ETF offers an annual dividend yield of 7.6% with a cost of 0.67%. So on a yearly basis, John's $10,000 investment at year's end would equate to $760 with a cost of only $67. And in 10 years, that investment would have a value of approximately $19,562. This estimation reflects the potential income generation and growth offered by SPHD, highlighting its commitment to rewarding investors through consistent dividend increases. With a significant gain of approximately $9,562, he not only showcases the success of his investment, but also enjoys newfound financial freedom, enabling him to enjoy luxurious amenities and confidently pursue his dreams. What's even more exciting is that the ETF has been on an upward trend, steadily rebounding from the significant negative impact of the global pandemic. This resurgence signals the fund's resilience and the potential for capital appreciation, further adding to John's enthusiasm. The impressive track record cements SPHD as a reliable source of income, making it an attractive investment option for dividend-focused investors like John. But the list doesn't end there for John. Number 5. Invesco High Yield Equity Dividend Achievers. This fund promises to take the dividend-focused strategy to the next level. Over the past 5 years, the fund has demonstrated a dividend growth rate of 7.96% with a cost of only 0.53%. That's $790 at year's end with only a $53 cost. This consistent increase in dividend payments further reinforces John's confidence in the potential income generation offered by PEY. Based on PEY's consistent dividend growth rate of 7.96% over the past 10 years, John's $10,000 investment would have a value of approximately $19,647 today. The icing on top? The upward trajectory indicates the fund's resilience and potential for capital appreciation, making it an attractive option for investors seeking long-term growth. This ETF focuses on investing in U.S. companies that grow their dividends over time and aims to have less risk and higher distribution yield compared to other market ETFs. This means John can potentially benefit from the market while reducing his risks. But there's even more. Number 4. Invesco KBW Premium Yield Equity REIT ETF. Investors keen on opportunities don't look down on the Invesco KBW Premium Yield Equity REIT ETF, a promising investment option. What makes it special is that it gives more weight to companies that give higher dividends. Speaking of dividends, it aims to give out competitive dividends compared to others. In fact, its dividend of 9.75% with a low cost of 0.5% means that if you invest $10,000 in this dividend-focused ETF, the return after 1 year would be $975, while only costing you $50. This high yield is because the ETF invests at least 90% of its money in publicly traded financial companies. And assuming a 10-year time frame, John's $10,000 investment would have a value of approximately $23,817 today. This ETF has been one of the best because they follow an index that focuses on financial companies and gets rebalanced and updated every quarter. KBWY's main investments are in commercial real estate, niche real estate, and residential real estate. This helps diversify the investments and gives investors like John a chance to invest in different parts of the real estate market. Number 3. Global X Super Dividend Emerging Markets. In short, it's known by its ticker symbol SDEM. It's a fund that catches the attention of investors because it has a really high dividend yield of 10.1% and charges only 0.67% in fees, which, for $10,000 invested, means a year-end return of $1,000 with a cost of $67. It focuses on investing in companies from countries with emerging markets, letting investors take advantage of the potential growth and income opportunities in these exciting markets. Based on the Global X Super Dividend Emerging Markets Fund's high dividend yield of 10.1%, in a 10-year time frame, a $10,000 investment would have a value of approximately $28,540 today. The fund's focus on giving all companies an equal chance for profitability, regardless of their size, further adds to its appeal for investors seeking diversified exposure and attractive returns. With the substantial gain of approximately $18,540 on his $10,000 investment in SDEM, John now has multiple options to use the extra funds. He could choose to reinvest the gain into other investment opportunities to further grow his wealth. But the next ETF on John's list has investor confidence in it. Number 2. VictoryShares International High Dividend Volatility Weighted ETF. John dives into the details, discovering that this ETF is a hidden gem that combines stability and substantial returns in the international stock market, something everyone wants for their portfolio. So he invests $10,000. The cost of investing in this ETF is really low, at only 0.45%, which means John only has to spend $45 on fees. But fees are just one part of the investment. The next important part is the dividend yield. This ETF has a really attractive dividend yield of 6.1%, John can expect to receive $610 in dividends from his $10,000 investment, which is like getting a nice chunk of extra money on top of what you invested. What sets this ETF apart is its impressive dividend growth rate of 31.6% over the past 3 years, which is very good. Based on that dividend growth rate over the past 3 years, the value of John's $10,000 investment today would be approximately $15,284. And if you drag it to 10 years, that $10,000 investment would yield $30,888. The financial performance of this ETF over the past 10 years has been consistently stable. It's the kind of performance that brings confidence for long-term investments. This ETF aims to strike a balance between stability and profitability by providing a blend of low volatility and large payouts. However, as intriguing as this ETF is with its impressive dividend growth rate and low volatility, an even more fascinating aspect awaits exploration. And that's number 1 on our list, the Global X Super Dividend ETF. This ETF has a special strategy. It invests in 100 companies from all over the world that pay the highest dividends, which explains its high dividend yield of 12% with a low cost of only 0.45%. For a year investment of $10,000, the return would be around $1,200 with a cost of only $45. John's investment of $10,000 10 years ago in this ETF would have a value of approximately $31,384.28 today. That's an extraordinary gain of $21,384 on a $10,000 investment in this high-yield ETF. John could use the extra funds to fulfill his lifelong dreams, whether it be embarking on a thrilling round-the-world adventure, immersing himself in new cultures and experiences, or pursuing higher education to expand his knowledge and open doors to exciting career opportunities. What's impressive is that this ETF has given out monthly dividends for an impressive 11 years. This means investors can count on getting their regular income. By focusing on companies outside the United States, the fund helps investors diversify their investments and earn more money. This means investors have the chance to benefit from the growth and stability of these sectors. Some notable investments include companies like Yushu Property Company Limited, CPFL Energia SA, and Omega Healthcare. This mix of investments helps diversify and increase the potential for earning income. Are you tired of the monthly struggle of paying your rent? We might have something for you. Click the video on the screen to find out 6 monthly dividend stocks that will pay your rent.